Wednesday, May 16th, 2018, Monaco 64, home of alternative economics and contrarian views. Aside from looking at the market as usual this morning, I'm going to talk about being your own central bank. And not only your own central bank, but your own depository of securities or tokens, and why it's so important. And I've been reading through Telegram chat groups, and this is why I'm making this video, to clarify not only about cryptocurrencies, the blockchain, but also the financial system, about precious metals, and how you should try to cut out third parties and be your own central bank or depository. So before that, I'll have a quick look at the markets. If you want to know what was happening yesterday, I did a live stream, and it's recorded. You can go into my YouTube channel and check it out. It was done yesterday, and it talked about what the market was doing at the time. It didn't change much towards the close, so it's just gone 8 a.m. London here on Wednesday. So we got spot gold is up $4.50 at $12.95. Of course, we had a big drop yesterday. Big dump in the futures market, which is paper, of course. I noticed, and I spoke about that yesterday in the live stream, that the big dump was just after the COMEX regular hour open and just when the US retail sales statistics came out. That was the time as well when the bond market dumped and yields went up. Silver's up 5 at 1631. The range has been 1624 to 1633. So yeah, precious metals have stabilized a little bit. Are they out of the woods? Don't know. But longer term, of course, it's still my favorite form of financial insurance, of way to protect some of my wealth and savings. The Dow, yesterday, stocks had a bad day. They did rebound from the lows. They were down over 1% at one point. The Dow finished down 193, down just over 0.75%. S&P finished down 18, just over 2/3%, and the Nasdaq finished down about 60, down 0.8%. So yeah, the Dow right now is down 8, so it hasn't really rebounded much. The S&P is unchanged, and the Nasdaq is virtually unchanged as well. So not much going on there. Currencies, of course, the dollar rallied yesterday, and this morning currencies have stabilized as well. They're pretty much unchanged. The pound is what, 135.03, actually unchanged. Euro is at 118.35, down about 2 pips. And the dollar is lower a little bit against the yen, 110.22, down 0.1%. Crude oil, 71.05. Of course, a big event yesterday, aside from the dump in gold, the gold price. And the thing about gold is that this is all paper trading. You don't see people out in the streets going to dealers or coin dealers, getting rid of their, of their physical coins and stuff. At least I didn't. But the big move yesterday was the 10-year yield, or the bond market. We made a 4.5-year high in yields in the 10-year. We got up to 309 yesterday. This morning, it's dropped a little bit. It's 306, still elevated. It's down 1 basis point. The close last night was 307. So that's the bond market. And in terms of headline news this morning, actually there's an interesting news here. And I saw this going through the Zero Hedge headlines. Excuse me. And it says, global synchronous recovery collapses as Japanese GDP plunges in Q1, first quarter. And I think they use that term global synchronous recovery as kind of taking the mickey out of the mainstream economists, people like the central banks and IMF. They like to use this term now, global synchronous recovery. And so the Japanese GDP came out this morning. I'll tell you where it came out, what was expected. So GDP year on year for the first quarter in Japan was expected to drop by 0.2%, which wasn't good already, but it dropped by 0.6%. So it was a big drop there. The previous GDP number was up 0.6. So the Japanese economy is like turning around, a lot like the UK GDP a few weeks ago. Same thing came out really worse than expected. The quarter-on-quarter number is expected unchanged. It came out down 0.2. And the interesting thing about the Japanese number is that the GDP price index, I guess that's what they use to calculate inflation in the GDP, that was, the previous was 0.1% year on year. This one is expected 0.3%, and it came out at 0.5%. So even in Japan, which is supposed to have had deflation for the last 35 years, things seems, prices seem to be picking up. So now, to being your own central bank, it was Jim Sinclair who coined the phrase, and it's even in his little pocketbook of gold, a survival manual from monetary mayhem. And on page 9, he says, gold allows you to be your own central bank. Although a central bank is supposed to maintain the value and purchasing power of a currency, he says, I'm reading from the book, it has both the ability and the tendency to depreciate the wealth of citizens through excess money printing. Interestingly, while they issue paper money, they also maintain gold as a currency reserve. That alone should tell you something. Central banks do not depend entirely on their own paper currency to maintain wealth. They use gold. Why? One reason is because gold offsets currency risk. So you get the idea. So owning your own gold, you like the central banks, or your own silver. And what's that got to do with with cryptocurrencies and all the other, and the tokens, and also the question of a depository, being your own depository as well? Well, I'll start from, go back a little, like maybe 19th century, early 20th century. Stock markets, people used to receive paper certificates for their share ownership. And I guess they could, it was cumbersome. So they, for people to deal with their broker and the exchange and then say, I want my paper certificate back. And they probably gave it back to you, but it made it all cumbersome because there was no electronics, no anything. So things evolved, and they developed what's called the Depository Trust and Clearing Corporation, the DTCC. So, and I read about the DTCC. So these are the people who keep all your bonds, investment trust, unit trust, mortgage-backed securities, money market instruments, over-the-counter securities. They keep your stock certificate, everything. So it says here, this is from Wikipedia, the Depository Trust and Clearing Corporation is an American post-trade financial services company providing clearing and settlement services to the financial markets. It performs the exchange of securities on behalf of buyers and sellers and functions as a central securities depository by providing central custody of securities. So it was established in 1973, and it says the depository, the DTC, I guess that's the precursor to DTCC, was created to alleviate the rising volumes of paperwork and the lack of security that developed after rapid growth in the volume of transactions in the U.S. securities industry in the late 1960s. And then you look at what kind of institution it is, and it says it's a private institution, finance holding company. It's based in New York City, 55 Water Street. And it goes on to say owners, and it doesn't give the exact owners, but it says the banks and the brokers. So the people that have not been too honest in the past, they're the ones in charge of all these, everything in the mainstream financial sector. They keep everything with the DTCC. And that's not only for the US, but the whole world. It says in 2011, DTCC settled the vast majority of securities transactions in the United States and close to $1.7 quadrillion in value worldwide, making it by far the highest financial value processor in the world. DTCC operates facilities in the New York metropolitan area and multiple locations in and outside America. So here you have this company owned by the banks and the brokers who keep all your stuff related to the financial markets. Stock certificates, bonds, unit investment trust, even OTC derivatives, everything. And this is what they're scared of, I think, the big banks and the brokers, is that the blockchain allows people and cryptocurrency to keep their own stuff or securities or tokens in their own hard wallet. And that's why I want to tell people, because reading a lot about the EOS crowd sale and the fact that you need to register your wallet address with them so that after June 2nd you'll be able to claim your EOS tokens, not the ERC20 tokens. It's so easy to register them. But I go through the Telegram chats, and so many people are lazy and they say, oh, this is complicated. I want to keep my tokens with such and such exchange. They should do everything for us. And they miss the point of decentralization of the blockchain of cryptocurrencies. It's supposed to solve this problem of the DTCC. You can bet if there is a financial implosion in the financial market, are you going to be able to get back your stock certificates? They probably don't even have stock certificates anymore. It's all, the banks will have it all because they own, the banks and the brokers own the DTCC. All I'm trying to say is that, yes, exchanges serve a purpose in the cryptocurrency space, in the blockchain space, but keep your tokens and everything in your private or hard wallet, so to speak, hard wallet. And when you need to trade, send it over there, do your trade, finish the trade, send it back. It's so easy. It doesn't cost much. It might cost a little bit, but all the problems that I've seen from cryptocurrencies are all related to exchanges. People leave too many tokens there, like Mt. Gox comes to mind. And people are missing the whole purpose of the blockchain is to decentralize everything, because technology now allows us not to depend on the DTCC and institutions like that. But nowadays, for example, stocks that you own, my mining stocks, they're with a broker. I can't call them and say, oh, transfer my certificates, my paper certificates or electronic certificates to me. No, they keep it there. Unless you sell in the market, they have to keep it there. But with cryptocurrency, it's different. You don't even have to call anyone on the exchange. You just send your tokens to your hard wallet. It's so easy, and I just don't understand why people, and I'm not slagging off exchanges, they serve a purpose, but people should wake up and not keep their tokens on the exchanges. It's so easy to transfer in and out and do the trade. They need to do their homework, and I'll put a link below in the description and also a video above in the cards from the Awakenment. He explains exactly how you should register your wallet for the EOS mainnet that comes after June 2nd. It's not hard. It takes a few minutes. You might have to use a bit of ETH or gas, as they say, but it's nothing compared to the peace of mind that you get from being your own depository and your own central bank as well by holding your tokens yourself. Don't leave it with the exchanges. The other thing they do, the exchanges, is that by leaving all this stuff with them, with the banks and brokers, because the DTCC is basically a front for the banks and brokers. They're able to use your securities and everything else, and they to how can I say, to write derivatives on top of it, because they can lease all your securities. You don't even know what they're doing. You don't even know if you have anything. If you don't even know if you really bought securities. So that's what I'm trying to say. Be your own central bank. Be your own depository trust, and don't expect exchanges to do everything for you, and don't keep your stuff in the exchanges unless you're a day trader. But then, you know, that's different. Even then, at the end of the day, you should be able to take everything back to your wallet. The next day you put it back in there. Yes, it costs, but that's the safety of it. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can follow me on DTube, which is on the Steemit blockchain. It goes directly to Steemit. And you can follow me on Twitter as well. And yeah, have a good day, and I'll talk to you later. Take care. Bye.